So welcome to our webinar about navigating rising premiums and client expectations in a hard market. So today hosting our discussion is Quandri's co-founder and president, Jamieson Fregeau. So without further ado, Jamieson, over to you.
Thank you, Tessa. And thank you for everybody joining us today. As Tessa said, I'm Quandri's co-founder and president, and I focus a lot on our product and what Quandri is building. So that's what Quandri is building today and how customers are using it, and where we are going next over the next year and the next few years. And we determine that by understanding what's happening in the insurance industry and what's happening within our customers' businesses. And so as we go through this kind of understanding process and learning about the industry, we wanted to share some of that industry expertise with a larger audience. And so we decided to do a fireside chat about the state of the industry right now, looking at 2024 coming to an end. And as all of our businesses are starting to look ahead and plan for 2025, we've invited two great guests to share their experience about the Canadian insurance industry and what's happening today. So I would like to introduce both Brock and Lesley here. I'm going to pass it over to the two of you to introduce yourselves. And then we're going to get into some questions about the state of the industry, what's happening, and what we can expect going into the new year. So Brock, I'll pass it to you first to introduce yourself, and then Lesley, go to you after.
Sure. Hey, everybody. My name is Brock. I'm the COO of Cornerstone Insurance. I've been in the industry 24 years now. Cornerstone Insurance is a brokerage in Saskatchewan. We've got a few bricks and mortar locations in Saskatchewan, and we have a digital insurance brand, Swift Digital, that operates in the other 4 Western provinces. Staff size about 50, and yeah, that's us.
Great. Thanks, Brock. Lesley, how about you?
Yeah, hi everybody. My name's Lesley Koopmans. I am currently the corporate personal lines manager for McDougall Insurance. I have been in the industry for 16 years. I've done a few different roles, including sales of both personal and commercial, but I've landed kind of on the personal side of things. McDougall Insurance, our larger national brand, is called the MIG Group, the McDougall Insurance Group, and we operate currently in Ontario and Alberta. We've been expanding rapidly of late, so my kind of my privy is still mainly in Ontario, but getting to know our partners in Alberta as well.
Great. Thank you, Lesley. All right, so we're going to kick off our conversation here. So I'm going to stop sharing so you can all see our faces. And I'm going to jump into the questions. And so this is going to be, we're going to start kind of looking at a zoomed out lens here. So both McDougall, Cornerstone, you both have a long history of serving customers through various market cycles. So I'm going to ask each of you to give your own take on what is happening in the market today, how that impacts your personal lines business specifically, and where you think this is going, where the market's going. And I'm going to start with you, Brock, for this one.
Sure. Yeah, so we've kind of come through a period where the personal lines market has hardened substantially. So we're finding that it's dramatically harder to place business. The rates are substantially higher. Renewals are coming out with drastic increases that are definitely causing alarm for our clients. And as our clients are alarmed and they're more sensitive to price, we're getting more pressure on our staff. So we're having to, resource the responses that we have to those client inquiries that are being driven by price. That's coupled with the market not allowing us to place businesses easily. So we're having to jump through more hoops to place personalized business than ever before. And then it's all happening in an economic environment also where people are feeling extra pinched for cash, and an employment environment where it's extremely hard for us to hire people, onboard them, and retain them. So we're trying to bear this enormous extra workload and difficulty while we're trying to do it where we just cannot get staff to accommodate that workload.
Right. Do you think we are in this period of a hard market for a period of time still? Do you think it will change?
I feel like it's going to plateau in the sense that it probably isn't going to get a whole heck of a lot harder, but I don't think we're going to see it recede back to what it was before. I think stricter underwriting is here to stay. I think risk selection is going to be more specific by our carriers. And I don't think rates are going to go backwards from where they are right now. So I think people are going to continue to find their insurance quite expensive for the next few years.
Got it. Makes sense. Yeah, Lesley, over to you. How does that compare with what you see in Eastern Canada?
Almost exactly. I couldn't have said it better. You know, for us, everything Brock said around the price increases, we're finding we're in a phase where it's easy to get the new business. Our new business numbers and personal lines are through the roof, both PIF count and premium volume. But our retention is also the worst it's ever been because people are also shopping. You know, we're getting all this business, but we're losing it too because clients are just, I don't know if it's also social media and it's easier to obtain quotes, but it seems like the business is moving around more than it ever has before. And just to Brock's point with the premium increases, I mean, until we can figure out a way to somehow cap claims costs, and I don't think the way that the government in Ontario is trying to do it by reducing some coverages is the way to do it. But I mean, if claims costs don't go down, you know, premium costs are just going to keep going up.
Mm. Does that mirror you, Brock, with retention being an issue?
Yes, yeah, same thing. Like our new sales are doing phenomenal, actually. I wish we had these new sales 5 years ago when we also had good retention, but alas, I don't get everything I want, apparently. So yeah, our retention is lower than it's ever been as well. And we're having to fight very hard to like move the needle on retention at all. Being in Saskatchewan, we don't have we're more protected from the auto side because we've got the government insurance plan here. We also have a substantial book of auto in Alberta, and it's very similar. There's new reforms that were just announced there, and I don't have any optimism for them, unfortunately. So
makes sense. So just looking at that and actually taking a bit of a step back, this current market we're in, where premiums are increasing, and we are in a hard market. Why do you think that is the case, and where has this come from? Lesley, I'll go to you first.
Because the insurance companies have awful loss ratios. You know, they're paying out so much on claims that they're not making the right profit to report to their board members and their CEOs and all those people. So they're increasing the rates to get it back. So I mean, it's until we can figure out the loss ratio piece and they figure out what type of risk they want to write and where those risks are profitable, that'll be what kind of drives us to get kind of a premium kind of plateau. But right now, I don't see that happening in the next 12 to 18 months.
Right. Do you see that in part due to an increase in catastrophic events across Canada?
Oh, 100%. Oh, absolutely. Yeah.
As the main driver for why those loss ratios have changed in the last number of years?
Yeah, and I don't have all the stats, but I mean, I think Brock, I feel like there's been 7 cats this year already in Canada. Does 7 sound like the right number? Yeah.
And they're not just barely into cats, they're like triple cats compared to what we saw like 10 years ago too. So
yeah, and it's the Jasper fire, but it's all the way down to the flooding that we had in Toronto. You know, like it's not even just wildfires or hailstorms, or it's all different weather related perils in all different areas of the province. There's wildfires out east, you know, like it's just every province has a different set of cats, but they're all getting hit with them. Yeah.
Right. Brock, yeah, does that align with why you think this is happening as well?
yeah, the cat losses are driving it for sure, and they're in the public, and so people are kind of aware of it. I think on one maybe deeper dive in that too is like as our costs increase, you know, the contractors' costs have increased, and the insurance companies are also paying more for their staff because Tim Hortons is paying $20 an hour, and so they have to pay it well in excess of that to get a professional underwriter in, and so just the cost of administering policies is higher. So the insurance companies have internal costs that are higher, and then you know a kitchen fire that used to cost $15,000-$20,000 is now $35,000 or $40,000. So when they're paying the same amount of damage, they're paying twice as much for it, and so their loss ratios are just deteriorating. You know, there's multiple forces deteriorating their loss ratios, and until they can get a handle on that, it's not going to get better.
Got it. Makes sense. Just a question that came in from Carol in the audience that I'm going to pose to you, Lesley. You see a hardening in property more of a concern than auto, or less so? And which one are you more concerned about?
I mean, in Ontario, auto drives everything. So, I mean, just because the sheer volume of Ontario auto, so I would say it's more concerning from an auto point of view. I mean, for us in Ontario, it's been auto thefts that have really been driving the price increases. I mean, thefts are slowly starting to come down, but they're still nowhere near the levels they were even 3, 4 years ago. I think the tag measures and all those other anti-theft devices that the insurance companies are approving to have customers put in is helping. But the criminals are smart. They're going to figure it out. But property is all weather related, but I would say the auto is more of a concern because that drives our volumes more than anything.
Got it. Interesting. Okay. All right. I'm going to move on here. So you've done a good job of explaining your take on what the market is like, why it is the way it is, and that it's not going to be changing over the next couple of years in your opinions. So what does that actually mean for your businesses? So what strategies, best practices do you employ to make sure you remain competitive in this hard market? And Lesley, I'll go to you first.
Two things. One is technology. We're implementing tools such as Quandri, I'll give you a plug there, and a few other ones, to try and figure out how to do the same job with less people. Just we have to find efficiencies. So, the same person needs to be able to do, 3 to 5 times the amount of things they did in an hour than we did 5 years ago. And the people that we had don't exist anymore. The baby boomers are retiring. We're not a young, vibrant industry that people really want to get into, that they think about it when they're in their 20s. So training, we've put a lot more emphasis into training staff, the last, I'd say 2 years for sure. Is it working? I think it's hard to sort of, I guess, to count on that. I think it is, but I see you can really measure what technology is doing. So, you can track how many things can they do this year compared to last year. I mean, underwriters are also pushing a lot more of their job onto us. And that's not the underwriter, I should say. I guess that's more the insurance company is expecting us to do more of the underwriting role. So our same people have to do more steps to the role than they ever had before too. So we have to use technology to help with that.
Got it. Makes sense. Brock, over to you. How does that compare?
I would say it's very similar. We're just in a cycle where we have to do more with quite a bit less. So for us, it's leaning into technology, making sure that our staff are trained in order to utilize the technology to its fullest potential. I find that sometimes you can deploy technology, and if your staff aren't going to actually take advantage of it, that you're just increasing the expenses that are already getting really high, and you're not getting the benefit. So that's really important to balance that, I find. We're also really focused on staff training. So we want to make sure that we're training and educating and building as much capacity into the people that we have as possible. I will say though that there's kind of a double-edged sword there, because if you get someone who's super high capacity and you lose them, that's a hole that's really difficult to plug in a given office or organization. So again, I think technology is kind of a reliable partner for us in a lot of ways, because no sick days, they don't call in randomly and can't come in that day. There's no vacation time. So if there are processes that technology is capable of doing, it's a really good stopgap for us where we can't find people.
Got it. So technology, you would each say, is the main kind of primary way that you are looking to ensure you remain competitive in the current market.
Yes, which is scary because, we're losing the knowledge side with technology. Technology can help with all the efficiencies, but it's hard to find staff that you could I always say it takes 3 years to have someone be a fully functioning insurance professional, whether that's an administrative role or a sales role, just because of all the things you need to learn, especially in personal lines with all the companies that we have. So that's yes, we're using technology, but we still do have to focus on the people. We're just figuring that out a little bit slower.
I think to Lesley's point too, the insurance companies are also under the same pressures, and so they're leaning into technology. But unfortunately for us, the technology is a clunky portal that is replacing an underwriter, but it's not really replacing an underwriter. It just makes us do that part of it. So they're using technology to push more work to us too. So we're getting pressure from that side as well.
Right. I'm gonna jump back to one of the things you both mentioned earlier. That really rings true for us. Of Quandri, obviously, we build technology, we deploy it into brokerages across Canada. But the adoption of that is one of the things we've learned is the most critical piece, right? We can build renewal reviews and put the information in front of brokers, but unless they're choosing to use it, it actually isn't generating the benefit for your brokerage that we are both aiming for.
Yeah.
How do you both approach that? How do you ensure that technology does get adopted the way that you intend it to, and that it actually drives the results that you're aiming for? And Brock, I'll start with you.
Yeah, we in the beginning of our technology journey, we didn't really have a plan around it. Now we've got a change management strategy for technology deployment. So we roll it out in layers, basically. So managers get it first, they get comfortable with it to answer questions with it, and then it goes to the whole staff. We, before it launches, make a huge like dog and pony show of like making the case why it's important for everybody. We try and get buy-in. So we make sure that the staff understands like this is coming, you can ask questions, you have resources to get help with it. This is why it's a good thing for you. And if it's a good thing for you, it's a good thing for the brokerage. This is why it's good for your clients. So we're trying to do like a 360 thing of making the case why every stakeholder in the adoption of technology is going to benefit from it. And then ultimately we have to just monitor it. And if we see areas where it's not being utilized, we just need to go and have conversations and resource that person in order for them to take advantage of it. And it creates more work on our managers, which is the whole theme of this, I guess, is more work for fewer people. But yeah, you have to just monitor it and drive the change, basically.
Mhm.
Yeah, Lesley, is that similar?
It is. I mean, I don't think I mentioned this. Our brokerage is just a different scale, like a size scale. So, Brock, I think you said you had what, 50 people?
Yeah.
The area in Ontario that I'm kind of responsible for overseeing, we have about 500. The whole MIG group is over 1,000, but the ones I'm responsible for is about 500. So we have a workflow team. So the workflow ladies really, figure out the workflow to the best I think it is. We pilot it with a group of frontline staff because we have more staff that we can use to do it. We actually kind of keep the managers out of it, good or bad. But yeah, same thing. I mean, for us, it's been a learning curve. I mean, the technology that we've adopted in the last 5 years is just wild compared to even the 15 years before that. So we're definitely learning as we go. But yeah, we just pulling reports, talking to staff, honestly kind of seeing, are we having to replace the staff if they leave because of the technology? Like things like that in different areas that we can move people as a result of the technology. So I don't really have a good answer. We kind of roll with it, which I guess doesn't sound very professional, but
Yeah. Yeah, I mean, you've both said that you've learned a lot in the last, say, 5 years implementing technology. What are some of the things you've learned? Like, what do you think either you or you see people do incorrectly when implementing or adopting new technology? I'll just go right to
they
you,
don't
Leslie.
read their email. Like, I mean, we roll out something and there's inevitably tweaks because what works for someone in this branch doesn't work for someone in this branch with this size of book of business. So we send updates out and then they don't read the updates and then, and then they're doing it the way version 1 was and we're on version 5. So struggling to communicate the information properly all the time is something that we've had to learn over the last couple of years for sure.
What is the solution to that? Over communication?
Yep.
Yeah. Making sure it gets heard over and over again.
Yeah.
Makes sense. Brock?
Yeah, I find that people in general have this approach like, okay, I'll try it. And if I hit a wall or there's anything that I don't understand, I'm just gonna like drop it and revert back to what I know because what I know used to work for me and it's gonna keep working for me. But you have to kind of break that cycle and be like, yes, it's gonna be a little bit more work to learn it and you have to put a little bit more effort and thought into it. It won't be quite as automatic for you, but like once you actually get on this new system, it's better. We speak of ourselves as a company with a culture of change, and so that's part of our culture statement is that we're a change company. So we try and indoctrinate people with that like change will always be coming at you here, and you just need to get on board with it. And so we've done a lot of work to make sure that's part of our culture fabric here. And so I think that helps us, but we had to work really hard to get through to everybody that change will never stop coming here.
Right. Makes sense. Okay. Well, that leads pretty well into my next question here, which is, when we're speaking about technology and where we are now, what do you think and how do you think this impacts a personal lines brokerage over the next few years? Where do you think technology is going to go? What do you think those kind of practical impact in a personal lines brokerage is in the next year, or 2 years, 3 years? Brock?
Yeah, I think that in my time, I can actually remember sending requests by email was going to change the broker's world, and social media was going to do it, and then mergers and acquisitions was going to do it, and now AI is going to do it. There's been a lot of periods throughout the last couple of decades I've been around where something has come out and it's going to it's an existential threat. The industry is going to fall apart. But at each of those kind of inflection points, I've found that you just have to kind of figure out how the broker value proposition is augmented by whatever that technology is, and then deploy that to your customers. So I think the broker's value proposition will have to evolve over the next few years as RPA and AI start taking over some of the work that people did. I do think there's still going to be a role for brokers as advisors and relationship builders. I just think that we need to be cognizant of the fact that has changed and will continue to change, and we just need to be able to reinvent ourselves to make sure that we're still inserting value into the transaction for the clients.
I'd like to just dig into that a little bit more of what do you think the value prop is today, and how do you think that changes with the advent of more and say smarter technology?
I think we've kind of seen a trend happening where it used to be we were the only source of insurance, and so people would just come to us because we were it basically. I think now people can go online and get quotes. There's a lot of different avenues people can get quotes, and so we actually have to position ourselves as a trusted advisor essentially. So we have to be in the mix, giving advice or adding value beyond just fetching a price for them essentially. And I think that people still like to deal with people. So there's kind of that oh, someone helped me, and so if I have a problem, I know who I can go back to kind of thing. I have seen lots of studies and lots of demonstrations where AI looks extremely human, and so AI may be able to replicate some of that comfort that people give to people. So I think it's going to be difficult or more difficult to navigate that for sure in the coming years. I don't think we're there yet, and I don't think we're going to be there in the next 3 years, but we are just at the advent of the AI boom. So I guess we'll have to see what happens in the next couple of years.
Mm-hmm. Mm-hmm. Yeah, Lesley, what do you think?
I totally agree with everything Brock said, and I think we need to learn as brokers how to work together better with each other. I'm coming from a brokerage that is in a huge M&A phase, and I don't see that slowing down. And we have been learning a lot from the other broker partners that we have been merging with, that we've acquired. They have such great ideas and stuff that we didn't think about internally, that now that we watch what they've done, and not everything, we do some things better than they do and vice versa, but as we grow and get stronger, we're adopting best practices from the brokers that we're acquiring, which, like Brock said, in the insurance landscape, brokers are only going to the M&A is only going to keep going. So I think we have to remain learning from each other as much as we can learn from our insurance company partners as well.
Right. Makes sense. So one of the things I think we've been alluding to but haven't jumped right into is just the difficulty of getting staff, of getting good staff, training staff, retaining staff. And I think from a point of curiosity, how has this changed over the last, say, decade? My next question will be, why do you think that's the case? But I'll start with how has it changed? And Lesley, I'll go to you.
I think it's changed from before. People saw a career, as for us, I'll be honest, our biggest, our staffing area where we have the most issues are our frontline personal account managers, more that administrative role. And Before, that used to be seen as a role that was a career. You know, it was a good job. It was a job that, you know, people were, you got paid decently. You were seen as a, you know, a prominent figure in the community because you worked for this professional company. Nowadays, it's seen as a stepping stone. So we get a lot of turnover in it, you know, for salary too, but because they're trying to get to the next rung up the ladder. So I think we need to do a better job at making those staff realize that it is a really good job. You know, like, yes, you always want to grow in your career, but figuring out how to provide the room for growth in that role.
Makes sense. Brock?
Yeah, I definitely agree with that, where the front line is not the like desirable career that it used to be, and I think we need to make a better case for why it is. Um, I also think that like the value proposition that an employer offers to an employee has changed. So it used to be like, I want a stable job, I want a good work environment, I want a good work-life balance. Now that picture is very different. Like I need complete flexibility from work to work from home, or maybe work from Europe if I'm there this week. I need complete flexibility to like go get my kids at 3:30 and stuff. And so like the work-life balance component that we have to integrate in to actually meet what the employees want to be satisfied is just and I think the pandemic accelerated it too, because people were trending that way. But then when we had to all immediately work from home for a year, like they were like, oh, this company actually can do this, so now I'm going to ask for it. And so I think for us, trying to like keep people in offices to see people who walk into those offices is a necessity. But then in order to keep the staff happy and engaged, we have to have just enormous amounts of flexibility. And it's really hard to balance those two. And it happened so quickly, I think, because of the pandemic, that I don't know that anyone has really found the right answer to that yet.
Got it. Do you think we were talking about the hard market, rising premiums, do you think that plays a role in this as well? Has that job of being a frontline broker just got a lot harder over the last few years as the market has hardened? Brock?
Absolutely, yes. Like when I think back 10 years ago, we would get the odd angry customer who would make one of our frontline staff cry, and that was a hard situation to navigate. We're a smaller company of 50 people, but I think once a week we have to go and tell someone on the staff, like, they weren't mad at you, they were mad at the situation. Like the public we're dealing with are just quite a bit angrier, and their triggers are much quicker. So I do find that our frontline staff are navigating a much more hostile environment than they used to. And I think it wears on them, like it burns them out faster. And then they're having to also have a greater workload while they're also being, in these more difficult situations more frequently. So there is a lot more pressure on the front line from a lot of different vectors.
And same with you, Lesley?
Oh, for sure. And because most of the frontline staff are newer tenured, they don't have the tools in their toolbox to know how to deal with the situation either. You know, once you've dealt with 15 auto claims and you know that this happens when the rental car doesn't go back on time, you've got the comfort to have those difficult conversations with the client. I'm just using that as an example. So it's also a maturity in the role too that's missing because the tenure is so much less than it used to be.
Right. Is that something that you see getting harder? And where is the average tenure of your brokers? Are your brokers going to be retiring soon on average? Are they newer? What does the demographic of your brokerage actually look like?
It's kind of funny. It's kind of hitting off every one of our branches kind of at different times. Like we have some branches where kind of the mass exodus due to the boomers retiring has already started. We have some where it's probably going to start in the next year or two. So everyone, it really depends on the company, what branch you're talking about. But I would say you kind of go from having a group of staff that their average tenure is less than 5 years, and then a group of staff where their tenure is 35 years with no nice in between.
That's similar at Cornerstone?
Yeah, like when I was, into my career 10 years, there were lots of us that were 10-year people here. When I look at our front lines now, it's 1 year, 2 year, 3 years, and we have someone who's been here for 6 months, and he's doing the job of someone who should have been here for 3 years. So we are having to expect a lot more from these people really quickly. And the same phenomenon's happening to the insurance companies. So a very green broker calls a very green underwriter. They come up with a solution that is not a solution at all. They go to a very angry customer, and it creates a really bad maelstrom of a situation for them. So yeah, the turnover is definitely causing problems, and it's a ripple effect for the whole industry.
And you see that over the next few years, essentially, say 5 years of being exacerbated.
I think, like how Lesley said, it's kind of hitting their branches separately. I feel like every like distinct group is kind of going to have their just do or die year where there's the big turnover, and then the new group comes in, and it takes 3 or 4 years for the cycle to kind of smooth itself out. But I think you could probably break it down into different segments and groups, but every group is going to go through it at some point. And I think it's a 3-year, just like hold on and let's get through this kind of situation.
But you feel, and you are confident that you will be able to find the people to replace those that retire. It might just be more difficult than you'd like.
Yeah, I'm confident we'll be able to, but like to put it in perspective, we're a relatively small organization of 50 people, and we have a full-time HR person, and I say she's the director of HR, but she's a recruiter. So she spends her 40-hour week just recruiting. And I mean, 10 years ago, a company of our size having a full-time recruiter, I mean, that would never have happened. It's a huge investment for us. It's a large expense item for us, but it's essential because we could not fill the chairs if we didn't have that.
Mm-hmm. Lesley?
Yeah, I mean, for us, because we're a larger company, like we have different capacities. We sometimes hire out recruiting, but typically we do it in-house with our HR representatives. But I mean, we find still old school because we're in a lot of smaller towns. The networking of you bringing in someone that as a staff member still works. Word on the street, this is a great place to work. Please come work here. And that's primarily because I think we're in rural communities a lot of, like, we're in bigger cities too, but so many of our branches are in rural areas. We still rely a lot on that. Yeah.
Okay, yeah, makes sense. Interesting. Okay, well, we've spoken a lot about the market, the talent shortage, technology. A lot of these things, especially technology and talent, what you're balancing is being efficient and operationally efficient while keeping a strong and personalized client experience. How do you each think about that and the balance between efficiency and personalization? What does that actually mean at your brokerage? I'll go to you, Lesley.
I think moving forward, we have to utilize technology. So the technology is touching every file on renewal, and our knowledgeable staff are dealing more with the exception. Not that our customers don't deserve to have a client touch point as well, but we need to use technology to move that dial a little bit. So our staff are focusing on really looking at the files that need a person and different touch points throughout the file, like the claims experience or when they're buying a new house or a car or something like that. We can't be relying on having a person look at every single renewal year after year because we just don't have the people to do it anymore. Mm-hmm.
Got it. So it's a technology to handle the non-edge cases, non-special cases, so that people can focus on the areas that people should be used and more complex.
Exactly.
Got it. Any differences with you, Brock?
Very similar. We've just had to be very purposeful about identifying what each like function is, and like if this function has technology or it has a person, what's the value difference there, and then making a decision about where we cut it off. Like, where does a person need to touch this? Where can technology handle it? And we just have to make sure we're continually evaluating that to make sure that we're not losing people where technology can suffice, and also make sure we're not inserting technology where people are required.
Yeah. Where do you think that line is today? Where do you think technology should be used? Where do you think people should focus?
I wish I had the right answer for that. I'm evolving that. I think it's really like you have to, like, selling is an emotional thing, and making a buying decision on something like a insurance, which is a grudge purchase. Basically, I have to buy this. The bank said so. I have to buy this for financing. I have to buy this in case this thing happens to me 5 years from now. So I think it is kind of an emotional thing, and so we have to basically try and determine, where are our clients' emotions going to be negative to the point they might leave us, and there we insert a person to manage that, or where our clients, emotions going to be in check such that they're going to stay with us, and there we can let technology take over. So I think we have to just try and get an average read on our clients and figure out what their thresholds are. And I found that has changed. It used to be that people would tolerate renewals increasing 10, 12% without much fuss. Now we're getting these 7, 8, 9% renewals that would have been a breeze 10 years ago, and people are hot about it. So it's a changing situation, and we got to just make sure we're changing with it.
Got it. Makes sense. Okay. Well, we've had a few questions come in. We're going to be moving to Q&A here in a few minutes. But what I would like to end with is just a bit of a holistic look. We're nearing the end of the year here. We're coming towards 2025. And we have a number of other brokerages in the audience here. And I'm curious what advice you would give them right now about what has worked at your brokerages, what is not, what you're thinking about in 2025 as you navigate technology, the hard market, talent shortage. What advice would you give to those in the audience? And Lesley, I'll go to you first.
Okay. I mean, I think we've kind of been dwelling a little bit on the negative, which is hard not to because of everything that's being thrown at us as brokers right now. But we need to remember that, insurance is a really good industry. You can have a great career in insurance. It's a product that it actually helps people at the end of the day, even as much as Brock says it's a grudge purchase. But people need it. They need us. I would say you gotta use technology. You have to investigate what technology works best for you and your processes, but don't forget about the people. My focus for my division in the next year is really going to be how do we get those two things to come together even more? Because without the right people in the seats and the right knowledge base, they're not going to know how to use the technology, right? I don't think the technology is there to replace the people yet. It's just to replace the bodies we don't have anymore. But just, it's a hard cycle right now in personal lines. It will get better. It always does. It always goes up and down. There's ebbs and flows. It's just the cycle of our business. We just have to kind of hold on tight, I think, for the next, I'd say the next 18 to 24 months.
And it's a good point that we've been focusing a lot of the problems because we want to learn and talk about how we can improve those. But there's also a lot of things that are positive and a lot of things to be excited about. Lesley, what's something you're excited about for 2025?
Sorry, was that me?
Yeah, it was.
What am I excited about? Honestly, I'm kind of a nerd when it comes to the technology piece of it. So, just the different programs that we've been working with, actually rolling them out and seeing what they look like. And I don't really have one specific thing I can narrow in and say I'm really excited about this because I'm not excited for all the premium increases that are coming down the pipeline. But I would say our growth and expansion and using AI tools is one of my big pluses for the next year. Mm-hmm.
Cool. Thanks. Okay, Brock. What advice would you give other brokerages going into 2025?
I think we're at the point in the current technology cycle where we actually have technology augmenting what used to be the domain of humans. And I think it's just really important to accept that and to get on board with that. We're not at the start of it, we're kind of in the middle of it. So I think it's definitely time to make sure you're adopting it. We've also gone down the path where we'll rent technology, where we subscribe to it, or we build it ourselves. We hire a coder, or we have someone internally that will code it. We've had not great success building technology and owning it. Keeping it up to date, keeping it secure, keeping new versions rolling out, it's very expensive. It's very hard to stay on top of. So I think I would just suggest, and I'll plug Quandri here too, research great vendors like Quandri, because there's a lot of subscription model technology out there that you can plug into your organization, and it's not your headache to keep it current. So I think I would just maybe differentiate between those two options of deploying technology as well.
Yep, I can speak knowledgeably. Building technology and maintaining it is quite hard.
Sure is, yeah.
So right before we head to QA here, Brock, what are you excited about going into 2025?
Also a technology nerd here, and I have seen a few iterations of various AI platforms that are, I think, going to be coming out to the industry in the next couple of years, and I'm just really excited to see how that happens. So I'm really curious to see where AI is going to plug in to empower people to do more. So that's kind of my technology excitement for next year.
Thank you. Well, thank you very much to both you and to everybody in the audience. This was really interesting, both for myself and I think for everybody watching as well. There have been a few questions that roll in, so we're going to go to those. But first, I'm just going to talk about Quandri a little bit and how we kind of see this playing out. And so for those of us that are out there that don't know Quandri, Quandri exists ideally to serve a lot of the problems that were spoken about in this webinar. We're seeing an increase of premiums, we're seeing a decrease of talent, and technology should exist to empower people to focus on what they do best and enable them to not need to focus on the areas that technology can handle. And so Quandri is specifically focused on renewals and on doing the work that technology can do at renewal time and passing the work that people need to do and are best at to people. And so we're a platform and we automate the renewal review process. And we have just come out with the next key process within the renewal process, which is requoting. So now with Quandri's platform, a broker can automate reviewing and analyzing a policy, requoting it, and then passing all of that information to a skilled broker so that they can understand what's happening in that policy, what the available options are, and can use their knowledge and context to determine what the next best step is, both saving time and ideally providing a better client experience. And we want to take and focus on the renewal process to turn it into a data-driven and largely automated process that people work on top of, while Quandri does a lot of the brunt work. So that's why we exist and why we're focused about the hard market and what's happening in the industry, and why we're keen to get thought leaders such as yourself, Brock and Lesley, on stage here to talk about what's happening within the space. So I can't help but say anybody who's out there and interested, you can book a call with Quandri to learn more about it by scanning this QR code or reaching out to us directly. I would like to thank both of you, Brock and Lesley, a lot for joining us for this hour to talk about your experience and where you think the market is going. And I'd like to thank everybody out in the audience for joining us. Appreciate you coming to learn more and see what's happening in the industry and where it's going. So thank you very much. Appreciate everybody's time. If you're interested in Quandri, feel free to reach out. Tessa put a link in the chat. But besides that, have a great rest of your day, a great end of 2024, and we will see you all in the new year. Okay.
Thanks, everyone.
Bye.